Hey guys, so after that breakdown yesterday of 378, I definitely was expecting a continuation down this way, but bulls came out in just full force today. So one interesting thing to know is overnight, and you can kind of see it represented here, but the put call ratio on the CBOE equities had a record spike on it. So this also happened on December 21st, which is right here. And it's a very similar pattern. We had this massive rundown here and we bounced off support here, and you would think that we were going to get this continuation down. However, on this day also, it was another record-setting spike on the CBOE equities. So we had the same exact thing today, almost identical pattern. Isn't that pretty interesting here? So a little bit different candle body here, but we had a new low, boom, spiked up. So the interesting thing about today is we had this massive push up here throughout the morning. We kind of held back here. This was a great call entry. But after that, we sat in this same range for 4.25 hours. So from the highest part of the candle to the lowest part of another candle, we held $1.14 range for over 4 hours. You see it from right here to right here for 4 hours. That is insane. An insanely tight range. And even more impressively, if we look at the candle body closes, we actually held an even tighter 60-cent range for over 4 hours of trading. This is probably one of the biggest consolidation periods I have seen maybe ever on SPY. So here in the day too, we had broke out over this previous high, which was right here at 383.9 was my line in the sand. We closed over it, and by every means, because if you, I can't show Volt on my chart here, but if you looked at Volt, it was just straight green candles all day long pretty much. It was just trending hard, even into the end of the day. When we had this breakout, we should have seen a bigger push here end of day. However, as you can see, that did not happen. We had two huge breakdown candles here. It really looked like we were going to bottom fall out to at least 381.4. However, we held that support range and popped. But that last candle came in really bearish too. So taking a look at tomorrow, we obviously have broken through the bear channel here. So we can go ahead and get rid of that. Let me clear off my gaps here. So now we're just kind of looking at a possible V bottom here. We did close over the daily 8 EMA right here. I had mentioned we had this really tight range pretty much here. It was really 383 to 379.6. So we did close over that here at 383.5. So now we just kind of have a consolidation from 386.4 to 379.6. So we are just stuck in this range right here. 8 of the last, or 7 of the last 8 closes have closed in this range right here. So for me, if we can close over 386.3, that would open the upside for me. However, if we get a big dump and we close back under 378 tomorrow, then that would make me more bearish for next week. Tomorrow is the quarterly options expiration, so the JPM collar will roll. With that, there usually is some volatility that comes with that. I posted in my daily TA, the written form of it, of kind of like the general movement. But historically speaking, if we look at the March 31st quarterly, we had a pretty big, we had a small rally, 0.5% at open that lasted till 10:30. Then from the high of day, which was at 10:30, into end of day, it had 1.7% drop. Just during the last 30 minutes of trading, it dropped 1.34%. On June, we had a 1.2% drop at open. Then we had a massive 2.2% rally till 1 p.m. And then from 1 p.m. until the end of day, we had a 1.4% drop, which is a huge drop. And the same thing, that last 30 minutes had a 0.9% drop. And then we have the September 30th, the most recent quarterly. We had a 1.6% rally at open that lasted until about 1:15. And from there, we had a 2.4% drop until the end of day. Just the last 30 minutes of trading itself had a 1% drop. So pretty much on average, we are averaging from the morning high to we are averaging a 1.1% rally from the morning low to the high of day, and we are averaging a 2.1% drop from the high of day to the end of day. And during power hour, the last 30 minutes, we're averaging a 1% drop by itself. So that 2 to 3% range, if we did get that drop, that really could put us somewhere in this 371 to 375 range. However, I will say this is the first time going into the quarterly option expiration that we're actually going to be, we closed over the call side of the collar. So for tomorrow, and I can show it here, the call side of the collar is 38.70, which there's some discrepancies here. When they first opened their collar, it was definitely at 38.70, but now according to the OI, it's actually at 38.35, which is more down, excuse me, down in this range. But this is the first time we are going to open going into the collar at or over the call side of that collar. So this could definitely change the trend of like what we have and what we do. But the one thing to note is that during the March and September rally, or the September quarterlies, we did open over the put limit, and June was the only one that we opened under the collars, puts. So my thoughts on that is, because we did have a bigger rally in the June one, is that we did have some of the OI coming off on the puts, and that did push us up. So I do wonder if we'll see a bigger drop tomorrow now that we are even higher over the calls. So tomorrow's definitely going to be a volatile day and definitely be an interesting day. Take a look at futures daily here. So same thing, we have this really nice 39.20 to now 38.05 range. I mentioned yesterday that I was looking for this to possibly be a double bottom. I really didn't think it was going to hold. I honestly was expecting a retrace down this way to at least like 37.50. However, the bulls, they took over today. They popped us up. So we could end up with a double top here at 38.70. So that is something interesting too. We did end up closing at 38.71. So I guess it did end up closing us over the daily AEMA. We were under it. The new futures candle will open here in about 15 minutes. So this is our first close back over the AEMA since December 14th. But we could, as you can see here, end up with a nice double top also. Our key level I'm watching here is 38.78. Breaking through that level, I'm going to be looking for that 39.10 to 39.20 range. Taking a look at Tesla today. Tesla had a big day, a big last 2 days, honestly. With this 8% close, this is the biggest day it's had since July 21st, I believe it was. So if we look at our cycle of the downtrend, so we can look at the cycles here of how we see downtrend and then uptrend and then downtrend and then uptrend. The average uptrend is 4 days and 14.04%. Currently, we are at 2 days and 14.2%. However, the previous drop right here was double the length and percent drop. So there is a chance we could see a bigger rally. I really am eyeing at least a 136 to 140 range on Tesla. I mean, I don't think it's going to get there tomorrow, but maybe next week or early next week for the top of that rally here. The one interesting thing about this is the last 2 days is that it was announced officially, unofficially, that there was a margin call that actually did happen on Elon. However, we have been rallying since then. So I guess there is a potential that on Tuesday, when we had that massive drop, that he got margin called, and now we're so far from whatever his next margin call limit is that people are piling back in. I'm not really sure. Super volatile stock, obviously. But until we close back over the daily AEMA, this is just a rally. So that will lie right at 126.6 tomorrow. We have a nice trend line here that as long as we have to open over 126.6, it's about a $4 open. So it'll be about a 3 or 4% open in order to hold this trend line. So if we lose this trend line, then it does open the downside again. However, we did break this bear channel here. So kind of a mixed bag on Tesla. If we get a market-wise sell-off tomorrow, it would be expected to have a sell-off on Tesla too. But as you can see, Tesla can do whatever it wants to. Taking a look at the VIX here. So This was the December 21st where we had that PC spike, the previous PC spike on the CBOE equities. So looking at that, it's actually a similar structure right here as we had just today. And then this was the next day. So the next day here, we had a massive spike on the VIX. We actually had a 20% spike at one point. And that's when back here on the 22nd, we had this huge red day. We also had a phantom print on this day at 386.2. But we had a massive drop and we were down almost 3%. And we did open down quite a bit too, but we had a huge 3% drop. But we had that massive, let's see if I can scroll back to here for you guys. Here you go. So we had this huge drop right here overnight into the day, and then boom, right at 1:30, we had a massive rally. So that is something I'm watching for tomorrow. Just kind of being curious what's going to happen. We are still holding this support line here. We are still in this breakout triangle basically right here until we break one. Kind of just zoomed out here. I'll talk about this more tomorrow in the weekly video. But we are kind of forming a nice inverse head and shoulders here. So it's not perfect. I would have liked this upside to be a little higher. It does kind of line up with this one though. But if this pattern holds true, as you can see, we should actually be seeing a bigger push up to at least 420 to 430 area. I don't know if we have it in us, honestly, to get up there, but it is possible. However, if we continue to break down, then obviously this pattern is going to be null. It's kind of a tough place to be right now because if you look at, here, this one shows it better. If you look at our trend here, and I'll talk about this tomorrow more, our trend is drop. We have a short peak, and then we have the final drop. Then we go back and do a channel resistance. We drop, short peak, drop, touch the resistance. Short peak, drop, touch the resistance. So right now we are in a short peak phase, and these two doji candles tell us that we're going to come up here. Now there's no like designated amount that we have to go up. As you can see here, we actually dropped a similar amount. If you look from here, we dropped, let's see, 10%. Oh, that didn't do right. Yeah, 10%. So let's see where we dropped from here. And we're currently down about 9%, 8.5%. So, you know, this could result in a rally, which if we look at this rally was about half of the drop. So the 4% rally would put us about this 390 area from the low right here. So if we get our short peak here and we hold this 390, that could open the next downside. And you can see we still are in this bear channel. So that really does give upside next week to about 392. All right, I will do a longer video tomorrow night for the weekly to kind of talk more about what I'm seeing, depending on how we finish tomorrow. We should have the new collar posted also sometime at night tomorrow. I'll let you guys know about that too. All right, you guys have a good day. Thank you for tuning into this video. Don't forget to subscribe and like to stay updated with my most recent videos. There is a lifetime Discord link there for you guys. If that one doesn't link, just go ahead and send me a message and I'll get you guys a new one. Some of the benefits of the Discord is there's a live trading, live intraday commentary. I also do an updated pre-market with support and resistance levels every day. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit.